The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Kim Slater. Joining me tonight is Jeremy Hook from TMS Capital and Simon Gazowski from Bereford's Financial Planning. If you've got a question, and we hope we'll get plenty of those tonight about shares or stocks, our phone lines are open on 1300 34 35, 30 34 35 I should say, or if you prefer you can email us at yourmoney@skynews.com.au. So welcome to the program. Gentlemen, today a tsunami of results hit the market. We had the big ones, BHP and Fortescue. As we've heard, BHP's got a new CEO, but the results in many quarters were not unexpected as far as Hills and Fortescue were concerned, and it's perhaps the last chance for the China bears to really roar for my money. Today's pullback in both BHP and Fortescue was a great buying opportunity. You know, your thoughts first of all, Jeremy, on FMG. What did you think of it?
Yeah, pretty much in line, I think, Kim. Wasn't too much in the way of a surprise. I think for Fortescue, it's still, you know, I guess the thing is this stock has had an incredible run the last couple of months. So like a lot of other ones, it's a case of buying the rumour, sell the fact, the result's out, and the stock comes back. Well,
we might try and get this chart up out of the Fortescue presentation that I saw today, which was talking about China's iron steel consumption. I don't know whether we can get it up. Oh, waiting for it. Okay. But look, the interesting thing today was, okay, there it is on the screen. We're talking, if we have a look at that, we can see, you know, where China actually sits in terms of its steel consumption compared to its peers like, you know, Germany, Japan, Taiwan, and Korea, and you can see that China's lagging a hell of a long way behind, and to get to that dotted line where it just begins to catch up is still going to require a big push. So my thinking is that if we see some type of a curve occur there, like, you know, somewhere between Germany and Japan, there's still plenty of heat left in iron ore prices. Would you necessarily agree with that?
Yeah, I would. I think it flows over well to BHP too, of course.
Yeah, of course.
And the one thing I got out, well, the two things I got out of today's BHP announcement, Kim, sensitivity to iron ore price, $1 a tonne move in iron ore price equates at current levels for BHP to about $110 million of EBIT.
Yep.
That's significant given the movement we've had. The other one is how sensitive it is to the currency. And 1 cent fall in the US dollar, which equates to a 1 cent rise in the Aussie, does affect to the same level, about $110 million US. So very significant, and these things are important as we try to forecast how it will look in a year's time.
Well, the other, Simon, I'd like your thoughts on this. The other takeaway that I had from FMG is that they're going to be talking about the dividend payout ratio. Now, we know that this is a very popular topic as far as resource stocks are concerned, because, you know, Hills and Rio do have very low divvy payouts, and, you know, for our research sort of indicates that after Fortescue starts paying back debt, which is in September 2015, you could possibly see a dividend payout ratio of 40, maybe 50% from Fortescue. What do you reckon? Am I living in La La Land, or is it? Or is everything a possibility?
You've got a 0% payout ratio today.
Well, it's a zero, yeah, exactly. Well, 0 or 4 cents, you know. Take your pick.
Twiggy's going to want a dividend yield at some point, isn't he? But these guys have got a huge expansion plan, and I don't think they'll be able to pay out too much if they're going to keep growing at the rates they want to grow at. But yeah, we could finally get something out of them.
All right, well, look, let's get stuck into the callers. As we say, there was a welter of results there today, and we'll obviously hopefully come back to some of those with some of the calls we've got. But our first caller of the night is Carolyn, and she's from Melbourne, and she wants to ask you, Simon, about your favourite stock, Breville. Welcome to the program, Carolyn.
Oh, hi, guys.
Hi, how are you going?
Good, good. I'm a daily watcher and appreciate all the advice you give. Now, my question is on Breville. Yep. Yesterday, it opened at $7.08 and closed at $7.22, which was an all-time high. Fundamentally, it's considered a star stock. and the volume is usually around 250,000 a day. Now today, on a huge opening volume, it opened at 595, so it dropped on opening about 17%.
Yep.
The volume over the day was 4.5 million, which is a big increase on 250,000. And it finished the day on 565 after a low of 550. So the news today wasn't that bad.
Well, I think
what happened?
Well, thanks for that, Carolyn. I was wondering when you're going to get to the point, but you did right. What did happen? I mean, that was a good result, Simon. And this is a stock that you've been in since what, $354 a share. You know, it just looked like it reached the point where everyone thought the results out. The stock does look relatively expensive. Perhaps it's now time to take profits. Anything else other than that, do you think?
Well, I think what we have to keep in mind here is 1 year ago, this is a company trading at $3 a share, went to $7.50, now it's $5.50. So you've still, if you've been in it for a while, made very good money. I think my reading is people are expecting perhaps too much. This company has brought out absolute cracker results for a few years in a row now. Now it seems they're transitioning to more of a steady type growth business model because they don't have any of that low-hanging fruit. They can't cut a lot more costs out of the business and they can't get rid of products that are no longer profitable. They've refocused their business already. So for me, I didn't see any major long-term problems in the stock. I think it's just a readjustment from super growth to something more normal.
Jeremy, it's interesting. This stock's still trading on a 6% dividend yield, and its big winner has been, would you believe it, those pod coffee making machines that they're selling in the US. So perhaps the Americans are finally learning how to make good coffee. But nevertheless, at these sorts of prices, what did you think of it?
Well, my understanding is that the main risk here to earnings came out today in the form of the potential of the loss of the Canadian distribution up.
Yep.
And that could affect 10% of EBIT. So that'd take the cream off it. But the numbers look good. They look great all the way up. It's done really well. But the aggressive selling you can see won't probably be the end of it for now, I don't think, and it'll probably pull back. It's just the nature of these things, a disappointment like that and the resetting of earnings outlook. It'll probably, take a couple of days in the sin bin. That'd be normal. But, it's a pretty healthy company overall.
Yep, okay. All right, we'll move on to our next call. I hope that helped, Carolyn, but our next call is Frank from Ballarat. Welcome to the program, Frank.
Thank you very much for taking my call.
Happy to.
Yeah, my question is about Monadelphous. Yep. I've got shares in Monadelphous and a bit surprised with the way the price has come down since they announced their very good report yesterday. And I'd just be interested in the panel's views and explanation of that. Thank you.
All right, well, let's kick off with you, Jeremy, on Monadelphous.
Look, probably the standout stock in the sector and one of the standouts in the market over the last 5 years. That comes with a huge burden of expectation, and that wasn't necessarily delivered upon with the numbers delivered there yesterday, nor the outlook statement. And I think mainly that outlook statement is what's caused the profound sell-off. You've seen a raft of downgrades by the brokers that have followed, so we've seen them slash by roughly about 15% their target prices, and as a result, you're getting exactly what you really have begun to see today in Breville. So it's almost like that 3 days of angry selling. You can feel the wrath in the market. Now, I don't think Monadelphous necessarily deserves that, and I think it'll bounce back quite strongly. But there are plenty who are now saying what they were also saying around mid-year last year. It's all over. For the turn in this sector has happened. But
it's somewhat ironic because last week we had companies reporting bad results and their share prices are going up.
Yeah.
This week we've got companies actually reporting, Breville and Monadelphous, reasonably good underlying results.
Yeah.
And the share prices are falling. So are we seeing another aversion to risk off? Because I did see that the banks are reasonably strong today, and maybe people are getting a bit panicky again around the edges.
I think it could be that. It is about the edges, though. It's about the marginal buyer and seller, and there's a fair amount of trade that leads into a result. And when it's all buying leading into it, often it's disappointment that follows. And, you can go the other way. One of the early reports in the season was JB Hi-Fi, and so little was expected and it flew when it was okay.
Correct.
It wasn't necessarily sensational. And And this is the whole thing that everybody in the market needs to understand is we're not pricing against last year or anything else. We're pricing it against expectations. And that if you can exceed those, you're going to get a green tick and a run for a couple of days at least. If you fail on that front, you're going to be sent down. And that's when you've got to know what you're looking to invest in. The thing about Monadelphous, it is often misunderstood. It is not just a mining services business. It operates in infrastructure as well. I understand that one of their divisions is particularly underperforming, but overall, this is a pretty high quality business. Remember, no debt, net cash, strong dividend, good company.
When you look at the fundamentals like that, no debt, strong balance sheet, you've got to think, well, it's actually in the box seat. Yeah. Anything to add, Simon?
I'll just say one thing to keep in mind, Monadelphous is a cyclical business, isn't it? This isn't exactly your bread and butter staple that will just tick over through everything. If there is a mining slowdown, even though they're partly diversified, they're going to take a good hit to their earnings.
Well, I'd beg to differ on that because I reckon a lot of these mining services companies are looking at diversifying earnings. And even though you've got BHP and Rio saying that CapEx is slowing down, CapEx is not stopping altogether. There'll still be CapEx. Yeah. And yes, you can see that there is going to be price competition. And it was interesting to see those figures today on Australian wage growth. Yeah. They've actually got wages slowing, and the biggest sector where wages growth is slowing is in the mining sector. So it sort of suggests that costs may actually be coming back to earth somewhat. Yeah. And if that does occur, bingo, what happens is companies look at it and say, hey, we can actually afford some of that CapEx again. Yeah. And if commodity prices keep moving in the direction that at least we expect them to be moving in, some of that stuff that has been mothballed might actually start to come back into the market. So for my money, Monadelphous looks like a bloody good buy at these prices, but that'll probably come back to haunt me.
And Kim, just on that, if you're going to sell Monadelphous, you want to get rid of virtually every other mining services kind of stock first because
correct,
it's right at the top still.
Top of the pyramid, yeah.
But I do think you have to recognise the dream run for these guys has to be over. Like well, there was a super boom for many years.
You know,
and
that's what
it's healthy for it just to pause.
But that's what everyone said when iron ore was $85. You know, that's the end of the world. And here we've got the price at 150, and the long run price looks like it's going to average out around something. Like even Nev Powers is even today saying or reiterating his opinion that it's 120, 130 bucks a tonne, and I think he's on the low side.
Yeah, I do. I think the ongoing nature of this sector is there's going to be some that lose more than others and some that win more than others.
Correct.
And that's how it'll front, for the next couple of years too.
Yeah. All right, let's move on to our next caller, who's Abe from Sydney. Welcome again to the program, Abe.
Thanks, Kim, for taking my call. I've sold out of some small cap stocks like DTE, Data Energy, and Continental Coal, and BSL, unfortunately. And I'm just wondering if there's any, if the panel can suggest some good low cap stocks where the horse hasn't bolted yet, and they still have potential to go up.
Good question. Well, you're usually the small cap. You've got a raft of those in your back pocket that you can pull out at the drop of a hat. So have you got some suggestions for Abe?
So we're looking for something a bit more blue chip.
Well, perhaps not. But we can see what's happened with Discovery Metals now that the Chinese have pulled out of that takeover bid at $1.40. I mean, that's just gone pear-shaped. But
actually, I'll tell you what I like at the moment is some of these quality businesses. They're a great business, and they just don't quite hit those expectations.
Such as?
For me, Cochlear, Sonic Healthcare.
Jeez. You're talking quality now.
I know, it's real quality.
Yeah.
Invocare, I think, is another good little small cap. Breville, we spoke about earlier. That's quite reasonably priced here. I think those kind of opportunities, quality businesses, when they get that temporary setback.
Well, given Abe's got a bit of a penchant for the resources sector, is anything in that sector that's in your back pocket?
That's why I'm giving him some new ideas.
Yeah, some new ideas. Well, I hope we can teach an old dog some new tricks. You got anything for
one we quite like in the small space, XRF Scientific.
Yeah.
The handheld devices, which can actually probably revolutionise the way scientific testing of mineral deposits is done, and that's quite a decent business. 36 cents, had a bit of a rally, probably up 20% over the last 6 months, but it's still small and it's in its infancy, profitable, paying a small dividend, looks good company. So XRF is the code as well, eh?
Well, for our money, Abe, we reckon BTR is where you've got to be in the if you want a good junior sort of emerging resource stock with the gold and copper play at Katoomba and also zinc at Pakoa. I mean, they're in a bit of a stash at the moment with Glencore, which should get worked out. But at $1.17, they're very, very cheap. All right, it's time for a quick break, but before that, though, it is time to start the stock watch. And Simon, you're first up tonight, so what stock are you watching? And your time starts right now.
All right, well, alluded to it just a moment ago, Cochlear is my stock watch at the moment. This is a great long-term growth business, and just the other week brought out a profit result that didn't quite meet expectations. If you think long-term though, the key drivers of the business is very, very strong. You've got an ageing population that needs hearing aids, and emerging markets growth still has plenty of potential to grow. So I think around these levels of $70, you can get in there.
Welcome back to the program. If you just joined us, Simon's stock watch was Cochlear, and the chart of that is coming up about now. Simon, well, I think we did speak about this last week when